Good evening, everybody. All right, again, the great visual benefit we have with candlesticks is we can see what a trend is doing. If we use just very simple indicators like the T-line, notice what happened on Friday with the Dow and the S&P. They hovered on the T-line and bounced back up. That in itself was a good, strong, bullish indication. Today, notice what they did. They gapped up in the Dow through what could be perceived as a resistance level. So this is just kind of common sense that I try to illustrate, which is that if everybody can see there's a resistance level and they're gapping up going into that, they're probably having very little regard for that resistance level. Now, instead of having to analyze one index by itself, kind of bullish concentration, not concentration, evaluation of, well, you're in an overbought area, yes, but look at what type of patterns you're creating, Joel. Notice what happened in the NASDAQ. We came out of kind of this slow curve, did a doji sandwich, breaking through the resistance level. So what's that tell us about the overall chart? We basically had a wave 1, wave 2, now going into wave 3. So remember, we're buying the patterns and what the investor sentiment is telling us. The stochastics just tell us where we are. So we've been pretty much in the overbought area for months now. But that doesn't mean there's a change of investor sentiment. That just tells you just be a little bit more cautious. Right now, we can see that we've got a new breakout. And where's our next likely target? Oh, pshaw. Well, Shazam, how do I do this? It might be up in this area. So got a trend, consolidation, and they go back to the trend. Yeah, I don't think we're in over-exuberance. Remember, this is why I commented a few times this morning that there was people on, I think the Fox Financial News, they were saying that this is a fake rally, that this market shouldn't be doing this. As long as you got people saying that, this market will continue to go up. It's when everybody concedes that this is a bullish market, that's when you start looking for the exuberance. So right now, no, I wouldn't call this exuberance. I would call this a breakout into wave 3. Crude oil. You can see where it is. Is this anything relevant? You look at what happened right here. You had a downtrending channel, and they broke through. They're still trading higher. Made some good money in lean hogs today, and that was probably due to the trade situation in Mexico. Hogs were up the limit today. So we'll see what they do if they break through the 50 tomorrow. Could be more upside. Now this is on the basis that look what has happened to hogs. Over it, make it even smaller yet. And it's been in a big steady downtrend. Now, notice what happens. They bring it down, take it up. Bring it down to a new low, take it up. Bring it down to a new low, take it up. Bring it down, not a new low. That's usually an indication that there might be a change of, I day trade commodities just because they move around faster and because I'm sitting here watching, doing other stuff. Anyways, let's see what else. Oh, soybeans. This is why you watch to see what prices are doing, not what the rhetoric is out there. Now, soybeans have been going down. Everybody's saying, oh, it's because everybody's afraid of the tariffs. Except if you look into the fundamentals of soybeans, the crop is going to be huge this year. So that's a political explanation for people that want to say, oh, the tariffs are hurting the farmers. But as far as the supply and demand, it looks like there's tons of soybeans out there. They brought it back up. They failed at the 50. It may head down even lower. If you're day trading the S&P or the SPY, it's like anything else. If this is the daily chart, you pick out what time frame you want to trade. Yep, they took a, I don't know if that's a true, but you can see once they opened up, they continued up. I don't know if that's a true spike down or not. But the charts are going to look just the same on a 1 minute, 5 minute, 10-minute chart as they are a daily, weekly, or monthly. All right. What else was I going to show of any great relevance? Gold. Gold is, no, that's not the one. Oops, I'm on the 15-minute chart. You can see gold is trying to base down here. So you've had a reversal, you've had a bullish engulfing. So where's your first likely target? Watch to see what happens. Yeah, that doesn't seem right there on the SPY, Rick. That may be a bad tick. Okay, so the stocks that we've been watching, the ones we recommended today, Match was due to, so you can see what happened today. It traded up but came back. Now that should give you a little bit of a warning. What are we expecting on this J-hook pattern? Obviously a wave 3. So now we have a shooting star right here at the resistance level. If you bought today, what's your criteria for staying in it tomorrow? It definitely has to open positive and trade positive. Even if it trades positive, you put your safety stop right here because logic says if they open it and then they come back down to this level, you had a shooting star, then a bearish engulfing signal right here at the resistance level. Tells you the bears have taken control. It only takes something like this as one position in your portfolio to bring up the whole return of the portfolio. Crone came out of that fry pan bottom and just has been stronger than bear's breath. So now you have a gap up in the overbought area with an indecisive signal. Where's your safety stop? Right here. If they trade it down through there or they open it down below that level, take your profits. Got to remember, this is just run from around 6 to 12. If they start backing it off, observe the obvious. People are starting to take their profits. So there's still lots of good money being made in this market. Nice steady eddies. Here's DNLI after the bobble breakout. So you look for these bobble breakouts because not only are they high probability trade setups, but the return is going to be much stronger than just having a slow uptrend. Usually they're going to have some explosion to it. Oh, do we have to say recommended at 644? All right. Rick, it doesn't matter. It doesn't matter whether they're buying long, they're buying short, whether the professionals are buying or somebody's grandmother is buying. As long as the price is going up after you bought it, That's all we want to see on our charts. Let's see, VSTM. Recommended this one because it was just now breaking out through what can be perceived as kind of a resistance level going into the next wave. Yeah, we'll get to the NVIDIA options here in a bit. I'm just going through some of the ones that we're long. YEX, J-hook pattern still working. This one, I don't know why I'm going to do this because it's not going to come up. GSM has a good looking chart. For some reason, it won't come up over here. Maybe I need to do this. S.GSM. Nope, just will not come up. Just makes you want to kick your grandmother. And HMI needed to stay above the T-line, which it's doing. So, again, your big breakout, your consolidation, now all you do is stay long as it stays above the T-line. You kind of passed over, on a call, bobble breakout. If this opens positive tomorrow, resisting here at the 50, tells you it's not there anymore, feel a lot more upside. So I'd be a buyer of this one on positive trading. TSRO, another one that we're holding. Because look at the series of dojis and then a doji sandwich breakout. You stay long, there's a little gap to fill right here, which would probably coincide with the 34. If it breaks through there, pretty good prospect of going to the 50. Now, IDRA, there is what we've been waiting for, is this breakout, which is your bobble breakout. So logic says, where's our next target? Up here at the 200. Wave 1, wave 3 on a bobble breakout being approximately the same. And SFIX, Stitch Fix, did a bearish engulfing in the overbought area. So what's our criteria at this point? Just want to be a little bit defensive. Oops, not quite there yet. So what do we want to see if this is going to be a good strong uptrend? Definitely open positive and trade positive. If it opens lower, starts trading down, it's coming back down to test the T-line, which tells us that instead of a trajectory like this, maybe you're going to be on a trajectory more like this with some iffiness in there. So you might take profits and move on. So anytime you see something that's starting to not look good, for example, Paul is one of our positions, but when it sold off, and then on Friday, it did a hammer doji type signal, which also made very easy analysis. It needed to open positive and trade positive. The fact that it opened lower and started trading lower told you get out of the position. It wasn't holding the T-line. Now what do you have? You got a bearish doji sandwich, which is not good when you're in the overbought area and you want to be going long. Any concern about IDRA? No. This is the pattern. So if it still continues to trade positive, especially going through this level, remember, just because there's a level, this is what we should be looking at, is the pattern itself. Yeah, you can call it whatever you want to. I'm calling it more of a bobble just because that's the most recognizable pattern setting up. MNK, nice steady uptrend. Now look what we're seeing, a little bit of iffiness. So you still have your safety stop just below the T-line. Logic says if it trades back down through there, they're selling it off based upon this the opening and trading lower. And that's, again, the benefit of seeing the different colors on your candlestick, because that's starting to show us that the sellers are starting to take control. So if it comes down below the T-line, you close it out. What's the next scenario? Watch to see if it's going to do a J-hook pattern. ENLK, look at your morning star type signal, right smack dab. Wave 1, wave 2, you're in wave 3. How long do you hold this? As long as you don't see a sell signal and a close back below the T-line. VSI, nice breakout of a fry pan bottom with a kicker type signal. What's your strategy here? You just stay long as long as it stays above the T-line. That very simple rule by itself will allow you to not get whipsawed like I did for many years until the T-line came along. I would always say, all right, well, it looks like it's time to get out if I didn't have the T-line on my chart. And if it turns back up, I'll get back in. Well, you never got back in because you moved the money on to someplace else. So Reggie backed off a little bit. Well, no, it was actually up a little bit today. However, look at the difference that we can see. This stock was up 5 cents on the day. Was that bullish? Well, looking at it from a candlestick point of view, not really, because it opened and they started trading it off and didn't bring it back up very much. So this immediately tells you there's sellers in here versus buying. So if you're just looking at it on a price basis, it's up 5 cents, still in a bullish trend. We look at it and say, we're starting to see some bearishness come into this this price trend. This one you stay long. Notice how it broke the downtrend with a doji sandwich breakout. Where's the first likely target? Probably up here to the 50. Angie's List. J-hook pattern. Now you've got a shooting star doji and a hanging man doji. You're in the overbought area. So where do you put your safety stop? Probably right below the low of today, because logic says if it comes down through there, that indecision up there is telling us the trend is over. IQ, didn't hear your response today. It didn't quite hit the 50. Get a little kicker type signal off the T-line. I would just stay long, but obviously watch to see what it does there at the 50. Nothing wrong with the chart. You just have to see what everybody else is watching to see when the investor sentiment is starting to change. And that becomes a lot easier for us. We were short Schmuckers. Then we saw in the oversold area a hammer signal. The next day it did a doji in the oversold area. So what's that kind of telling you? That even if you had a strong down move, what's this telling you? That the conviction of the sellers isn't all that great. So we closed out the position right here. So where's our next likely, or what would be our strategy at that point? If it came back down through there, that would tell us the bears are still in control. So if we missed out on, if this was a 12-point run and we only got 10 points of it, no big deal. I'd rather make less money and be correct a higher percentage of the time, because the compounding effect of that will be tremendously greater than a full move of a trend, because you're not always going to get a full move of a trend. Ready to close out. Brian, if this one, no, we've already closed it out, because look what the probabilities Look at all the indicators that was telling us it was time to close out. Hammer, a doji, you're in the oversold area, and look how far away you were from the T line. It was telling us the probabilities are starting to go against us. And ASYS, oops, make this smaller so that you can see kind of handle, scoop handle. You can still be buying this one on the basis that when it comes up here, you're right at this level. Now it makes it very simple. If they fail here, they've failed at the handle and the 50. If they go through, you've got a strong slingshot effect. When to get back in now? Probably don't. Just because a stock is starting to turn around doesn't necessarily mean it's going to be the best move to the upside. What made this a strong short was the fact that they did a kicker type signal to the downside. Is it prudent to play many stocks in the same vertical when they all show great candles? What I usually do, John, is if I've got 10 positions on and I see that the weed stocks are running, I might have 3 of those in the portfolio. If I see that the trucking stocks are the next strongest or also a strong sector, I might have 3 of those. Then the other 4 remaining might be mixed with just strong charts. So there's the old theory that that you want to diversify. Well, if you're sitting here watching for the best signals and patterns and they're showing up in specific sectors, the other criteria is you put all your eggs in one basket and then you watch that basket very closely. ASYS, I don't know. What was the volume on that? It might not have great volume. I forgot to look. Yeah, that's probably a little bit dismal as far as volume. 155,000 shares. Okay. Let's see. Before we take a look at some of the new ones, some of the biggies like Labu, right off the 50-day moving average, kind of your double doji. A good indication with them failing at the 50 or failing to fail at the 50, tells you there's probably more upside. So that means may not be trading Labu, but I may trade some of the biotechs. You consider the number of calls versus the number of puts per day? No. No. Everything else that you can think of has absolutely nothing to do with what the price of whatever you're trading is doing. Like somebody said earlier, it may be short covering. Don't give a hoot whether it's short covering. It may be because they're expecting legislation or they're expecting good earnings. It doesn't matter what the reason is for that stock price to go up. We don't care. All we're interested in is buying stocks that show chart patterns that investor sentiment is positive and shorting the ones that show negative. So a lot of people say, well, this stock's got a huge short position. Doesn't matter. If the price is going up, that's just maybe some added incentive, but it's not the reason for buying. The criteria, which is the signal itself of what everybody's doing. Tesla running into a little bit of problems here. Now, it was down pretty big during the day, but came back up. So it's I wouldn't be a long or short Tesla, but I'd watch to see which way it's going to break from here. Is a bubble breakout a stronger signal than a simple breakout or a breakthrough? Pretty much, yes. because you know that the next leg is probably going to be the equivalent to the first leg. So there's lots of times where, there are lots of times, let me figure out which one. No. I can't think of one. I know there's plenty that have something like this, for example. The resistance level obviously was right here, but that's not as clear to people as them seeing that the resistance level is a major moving average. Yes, the red line is the 200-day simple moving average. So a Bobble breakout is merely a J-hook pattern with much more clarity to it, telling you where they were selling and where they were buying. So you kind of had the selling up here, hold back, and notice what it didn't do. Really didn't close below the T-line. So now if they open positive, everybody and their brother is watching to see what's happening here at this level. If you took the 50-day moving average out of here, it would be a good chart, but it wouldn't be as significant because this 50-day moving average is what everybody's keeping their eye on. Let's see. Apple, still moving up nicely. You can see how the slow curve is continuing the uptrend. So once they did the best friend signal, what's our criteria for holding on to Apple? As long as it doesn't close below the T-line. For support or resistance, do you look more at the bodies or the wicks? Mostly the bodies, but the wicks also are relevant. For example, you can see how the bottoms were right here on the bottom of Apple, right on the 50. But the as far as they close, remember the two important factors for Japanese candlestick analysis is where was their first decision? Where did they open it? Where was their final decision? Where did they close it? Everything else during the day was just noise. That means the shadows are part of that noise. Now, obviously the shadows have relevancy. Let's see. I can figure this out. TCH. Have relevancy because they took it up and then they brought it back down. So that upper shadow told us there was weakness right here. Apple. Right here, yeah, with both of them. That is true too, Slom. So you have to kind of alter your decision making. Let's say, for example, you bought the calls on this one. Well, this would probably start telling me I'm going to close out option positions before I have a true sell, meaning close below the T-line, because if I'm seeing weakness, even though I haven't seen a true reversal, I've got to also take into an account what the time factor is doing. That I'm losing losing time, which means I'm losing that premium. So I'd be more apt to start taking profits in here, even though there isn't a truly confirmed sell signal. Now, if I own the stock, it might be a little bit more lenient because the time factor isn't there. And that's going to be something that we're going to be concentrating on in September. We're going to be doing option strategies, and they're going to be very extensive. There's going to be about 12 or 15 different option strategies, and there's probably going to be 4 or 5 strategies to a few of them, like the spreads, the staggered spread, on how you adjust your risk reward based upon your own, what do I say, your own risk tolerance. So anyways, that's coming up, and that's going to be very extensive as far as giving people a multitude of strategies. Not so much that you have a multitude of strategies, so you've got a good basket of strategies that you can apply to candlestick signals much more accurately based upon your own risk tolerance. Would you do a class on how to trade futures too? Yes, I can do that too. When it starts getting colder and we're staying inside and the cat is inside, yeah, Marshall will probably throw that in there too. It'll be expensive as well as extensive. It'll probably be just as reasonable as we try to keep things. Okay, NVIDIA. This went reversal in the sense that we could see what resistance level everybody else was watching, and it blew right through that. Let me see if I can. So now we're above that level. So how long do you stay in this? Well, you've just climbed into the overbought area. Your safety stop should be at today's open. Rick, thanks, but no thanks. When I was growing up, we had a mother cat that we finally had fixed after 128 kittens because everybody we knew already had one of her kittens and we couldn't give them away anymore. And she'd have 4 or 6 at a time. Okay, let's see. NVIDIA, FedEx. We mentioned this one in the options room this morning. The fact that they were right on a support level, they're kind of in this trend channel and they traded it positive. Where do you think the next target is likely to be that everybody can see? Right up there. So that, you figure it can get up to the 255. Now that gives you the opportunity to create some spreads that might be very viable. A morning star, not quite a morning star really. It's more, let me make this bigger. You can see that it's got a harami, but remember a harami of the same color is called a homing pigeon, but you still need the same confirmation. They need to open up positive the next day and take it positive. And Netflix. Netflix is a good example that if you've got a strong move and they're buying right here, they're breaking out, where do you think the first likely target is? Up to the next major move in average. So this is when, even though you're not quite in the overbought area, this becomes a very relevant place to start watching because that's where everybody else was watching. So what do you do here? You flip to your 10-minute chart. They came up, and then when they started backing off, what's the simple trading process? You close out the position and you get ready to buy back when it comes back up again. In this case, it didn't do that. So again, the probabilities of being up here, let's see if I can figure this out. Oh, that's not what I wanted to do. Where is this? This is right around 370.50. So if you go to your 10-minute chart, when it started coming back down through there, you had a couple options. If it held here and held up, they weren't failing at the 50. When they came back down through here, you close it out. When could you buy back? When it came back up through the 50. Potential doji sandwich, yeah, you've got the potential, but you've got also the potential of a evening star signal if they open it lower tomorrow. So you've always got potentials, but you know the simple rule of the doji, more than likely they're going to move it in the direction of how they open it after the doji. Okay, some other ones that look good right now. The fry pan bottoms are viable. Now this is World Wrestling. You can see the fry pan bottom. Would I be buying it today or tomorrow? Not necessarily, because it's still in the fry pan bottom, except if they open up above today's open and start trading positive, our little trend kicker tells us that fry pan bottom is probably going to kick in. TMO, another one. Notice what our doji told us, kind of a double doji sandwich breakout. That one I'd be more apt to be buying. Wave 1, wave 2, going into wave 3. Let's see, DCPH. Another slow curve fry pan bottom closing above the 50. I'd expect a 45 degree off of here. Bunch of ones that, so the reason we keep showing the different patterns over and over, now this one, the unique feature here is you've got a slow curve fry pan bottom. Looks all right. But what's the contributing factor here to make this a good trade? Because if it gets moving, look at the percent move it could be doing. This one's already moved from 240, got as high as, looks like about 18, got as high as 20. So there's something that's moving this around. So why do you want to recognize the patterns? Because you can utilize them for even the volatile situations where if they start taking off again, your percentage return could be fairly extensive, fairly expensive. I think another word. Defensive. ECYT, you can see kind of the fry pan bottom J-hook pattern. Tells me there's probably more upside. ICL. Anytime I see this type of setup, is this still a good trade? Yeah, even though it's gapped up, what do we expect coming out of a fry pan bottom? A breakout. We might have another move like this. This is what we're really looking for. Fry pan bottom, T-line crunch. They open positive. This is not an unusual situation, meaning a big move like this, right at a breakout level, we can see it coming more clearly, knowing there's a fry pan bottom that if it opens positive, it's breaking out of the fry pan bottom as well as the 200. We're buying it because we know it's breaking out of the fry pan bottom. Everybody else is jumping in because they can see that it finally broke through the 200. I'm going down the fry pan bottom list. Whoops, that was natty. And so this is why you want to learn a pattern to know exactly what should happen based upon that pattern. If I was buying this one today with the anticipation they were breaking out, I'm closing it when it comes back through this level. Because what is our expectation of a fry pan bottom? That it should be breaking out. It shouldn't be doing a bearish signal at the breakout level. So most of the time, I say most of the time, a high percentage of the time, the pattern's going to work. But if you've got a pattern that you can see setting up and it should be going this way, and it does this, what's that tell you about your fry pan bottom J-hook pattern breakout? It failed. Close out the trade. Now, I say that very simply or very quickly. But this is what I had to learn, because if I analyze this and say, oh man, this is going to be a good trade, if it goes positive, it's going to be a good trade. Oh, it's going south. Wait a minute, I analyze this as being a good trade, and it's not working. Maybe it needs more time. Instead of saying, this one didn't work, get out and go find something else that looks more like this, instead of sitting here hoping that your analysis is going to turn around and be correct when you can see the chart is telling you differently. Okay. Yeah. We were going to buy CDMO today on that same basis, that we were at the breakout level. Now this one is still not finished. You still got kind of a fry pan bottom. You're still at this level. If this opens positive and starts trading positive, you can still want to be a buyer, because where do you think your next target will be on this fry pan bottom breakout? Probably in this trajectory. So it didn't do anything to tell us the fry pan bottom was over. It just told us it wasn't a good day to get in it. Yep, they're easy to spot, Diana. Okay. Let's see. ALXN. Slow rounding bottom. Look at all the indecision here. Then your kind of your little spinning top gap up. Where do you think your next likely target's going to be? Right up here at the 50. Salam, yes, the slow curve is mine also. Whenever I can find a slow curve set up, I know that the slingshot effect out the other side is going to be either a failure and you get out to be a very extensive, profitable trade. PAH, look where it broke out, kind of through this little resistance level with the best friend signal. I would suspect this is heading back up to get into the trading range. Hydra we did. I'd be a buyer of this one on positive trading tomorrow, because not only will the probabilities be pretty strong that you're heading higher, but the magnitude of return is going to be pretty strong. CVGI. You can see wave 1, wave 2, hammer, bullish breakout. Expect wave 3 to be that same magnitude right there. TMO, a slow curve. Not so much as it is a fry pan bottom. I usually consider a slow curve a much more quicker, it's usually maybe 3, 4, 5 days, whereas this has been an extensive one. So it's still the same criteria. It's that buildup of investor sentiment, but I wouldn't put it into the slow curve category versus just a fry pan bottom category. Bison, watching this to see if they're going to break this out of kind of a bobble breakout. Failed. Came back to the T-line. If it goes up through, figure a fast move of that magnitude, which probably takes you back up to testing the highs. Trend kicker. Let's see. I meant to. This is Momo. Look at the trend kicker breaking up off the 50. What's a trend kicker tell us? More than likely, there's going to still be a lot more upside. So you're right here at this breakout level, or a little resistance level. Wouldn't be afraid to be buying this one on positive trading. And Billy. Billy was a good setup, but apparently they have already reported earnings. I think they were trading up in this range after hours. Yep. So, but that's still one that you had the slow curve. You've got the gap up. The slow curve was based upon the expectations of earnings. Now you see what they do after they open it up. That's where you flip immediately to your 10-minute chart and watch to see if they're buying immediately. Best friend, wave 1, wave 2, wave 3 in progress, ATTU. JD.com. There's kind of your Morningstar signal with your doji gap up. This one I wouldn't be afraid to be buying on positive trading, at least with the expectation it's going to come back up here at least to the 34 and then see if it gets through there. Notice you got kind of a double bottom here. And where do you start looking for buy signals? When you see a gap down in the oversold area, you start looking for buying. Yes. Let me finish a few more. I've got about 8 more, a few shorts also. And I'll tell you why I keep it at 10 positions. And this is nothing more than just trying to keep my emotions out of my trading. Chemet, notice how they gapped up through the 50. There's your Morningstar signal. There's your gap up. There's your doji sandwich. There's your gap up. I would suspect this has still got a strong upside to it. And BKD. Again, right here at the 50 is your doji sandwich. What's a doji sandwich imply? More upside. And it's that much more accentuated. That doesn't even rhyme with expensive. Accentuated because they did a doji sandwich through a resistance level. And we know what the results are after a doji sandwich. More upside. Right, I try to pick out one big word per day. Moss, there's your gap ups from a doji. Wave 1, wave 2, big hammer doji, gap up, best friend gap up, should have some strong upside. True, yes, that's what I was trying to equate BKD to Netflix, but then there was another one that gapped up and went positive, and I meant to figure out which one that was. No. Now, this is why you want to put your safety stop somewhere. Let's say you were long GameStop, and it started pulling back. Where did you think it was going to pull back to? The T-line. After it bounced up off the T-line, if you wanted it to be long, which way should it be going? This way. It shouldn't be coming back here. So if I had been long this one and I didn't sell it, but I knew it was going to test the T-line and it did, I'd still have my safety stop right here just to protect from something like that. What's a tweezer top and is it a resistance level? Yes. This is not quite a tweezer top, but a tweezer top would be if these two prices were the exact same, that would be a strong indication that was a resistance level. And it looks like a tweezer. Tweezer bottom, same scenario. The bottom prices, I haven't seen one for a while, but if I see one, but there's where the price, two prices are exactly the same. All right, so here's a case of, again, why this would be where you could either be more aggressive. Notice that we had a kind of a hanging man up here in the overbought area, then a doji. Well, we have much more fine-tuning with a doji than we do with the T-line, because we know which way it's going to move if it after a doji. So if I saw this, I would definitely had my safety stop just below the low of the doji, because logic says if it comes down through there, they're bringing it back at least to the T-line. Do the wicks have to be pretty long on a tweezer? Not real long. You just have to kind of notice them. And usually it's because there are wicks, but they don't have to be real extensive. No, the candles don't. It's the wicks, the very top or the very bottom of the wicks. Yes. I'll try to keep my eye. You don't see tweezers very often, but they are a indicator. Okay, Chipotle, big bearish engulfing. Now, what was the warning to start looking for profit taking? Bah humbug. Where do most people buy? They buy exuberantly at the top. There you go. When you see that gap up in the overbought condition, start watching for your reversal. So if I saw this and I was long Chipotle after this gap up, even though it was kind of a breakout, I'd still have had a safety stop probably at the halfway point of this candle because logic says if the bears could come back down through there, the bears are taking control. Now look what you've got. Your bearish best friend. Where do you think your targets are? Probably back to the 50. Overstock. Overstock. That was a good indication you should be going short. When they gap it up and they start selling it off, start watching for shorting. Same scenario the other day on bike. Big bearish belt hold. I would still be ready to go short on this one if it opens weaker tomorrow. What did I just do? Overstock. All right. Now, what's it telling us here at the support area? Well, it told us doji, doji, doji. Then they told us which way they were going. If they were basing, they would have gone up through the T-line. They've broken down. This one you can short on weakness because what type of pattern would you have? Wave 1, wave 2, bearish J-hook pattern, wave 3 to the downside. And HIB, H-I-B-B. Big kicker signal. I mean, this is where you don't have to know that this is a kicker signal. Observe that there's been a dramatic change of investor sentiment. More than likely, there's going to be more downside. So, two answers to your question. With so many good charts, are you stuck with your 10 trades rule? Yes. Which does two things for me. One, there's probably, as we've gone through before, there's probably 15 what we call the top ranked signals and patterns. You may not want to learn, or you may want to learn all of them, but you can't master all of them. So I've been recommending people take 3, 4 of them and master them. So that if you see something like this, a bearish kicker signal, you know what to expect, and you master it. Now, that's not a blue ice failure because this, I don't know what this was. Nah, blue ice failure is something where you see the moving averages. So you learn how long to stay short, what to look for. So that was kind of the same scenario that we were when we shorted Smuckers. When we started seeing this that far away from the T-line, we knew that was time to start covering the short position. So that would be, what did I just do? HIB? That would be the same scenario here. If somehow you got short or you were planning on shorting it, you watch to see, all right, once you get back to the oversold area, which might not be a while, you start watching to see where the equilibrium starts coming in. Stop loss is not going to help. Yeah, not with if you're long. But what it does do is, let's say you put a stop right here, say sell if it trades below this level. That means you're out here. Now, what does that do to you mentally? One, obviously it hurts, but two, instead of sitting here thinking, oh man, what should I be doing? I mean, they could be taking this back up. I don't want to, I should have gotten out here when it's trading here. Then it's trading here and said, oh, I should have gotten out here. I'm describing my normal trading practices before candlesticks came along. Where do I finally get out? When there's nothing left of the day, at the close, I get out here. What's that done to me? More than likely, no, the blue ice failure came from Dave Elliott of Wall Street Teachers. Did Mark Douglas, can't remember, did Mark Douglas work with Dave? Can't remember. But what probably happened if I didn't close it out on a stop and I didn't close it out immediately, I probably spent 90% of my time that day watching this trade versus watching the other trades. All right, now, I think I did all of them. Oh, one more, and then I can go into my... So this is where you observe the obvious. Which way is Under Armour going? It's in a downtrend. What happened when it hit the first major resistance level? Doji, bearish confirmation. Where do you think the next likely target could be? Probably back down into this trend somewhere. That's right. What about buying long put when you are extended? You can do that, and that's going to be one of the strategies, RP, that we discuss when we start doing our option training. So let's say you were long this and you have some big profits and you think it could still be going higher, but you might just say, all right, I'm going to buy an 11 put, which may only cost me 45 cents. I'm just picking out a number just for protection. But if this does turn around fast and I can't get out of my position real quick, at least the put will be helping me out. Is it still time to short Under Armour? I would think so, yes. I would think Overstock you could be shorting, and probably Under Armour you could be shorting. And Chipotle, another one that I think would probably be at least heading back in this direction. Okay, so back to the question, do you still maintain 10 positions? And the answer is yes. First of all, let's just say you have a $100,000 portfolio and you've got 10 $10,000 positions. Well, as you can see, with the number of good trades out there, no matter what condition the market is in, you're always going to have good longs and good shorts, more than you can handle. Now, if I've got 10 positions on it, may not necessarily mean I've got 10 long positions. I might have 8 longs and 2 shorts, or if the market is sideways, I might have 5 longs and 5 shorts. But what it does is let's say this is really a good-looking chart, and I've got 10 positions on, and one of them might look like this. Now I have to ask myself, does this have a lot of upside potential based upon being in the overbought area and already moving up, whatever this is, 35%? Or is it better for me to take profits, even though I don't have a true sell signal? Are my probabilities better to close out this position and move on to this one, where the prospects look pretty good. They're starting to take this back up. What that does is does two things for me. Mentally, it helps me get rid of positions that may not be ready to be sold, but are getting there. And instead of waiting for it to actually sell out, and I may have missed a position like this or something like this someplace else, it says, all right, is this a good place to be anymore? Maybe not. My probabilities are let's close this one out and move on to a better situation. So what that does is it kind of cultivates me to constantly see what my probabilities are in an existing position, and is it a better place to have my money versus one that has just now made itself evident. What that does for me mentally is it keeps cultivating me to move from iffy positions, even though they don't have absolutely true sell signals, to situations that have much better probabilities. So that's why I keep it. If I hang on to, if I buy an 11th position and hang on to this position just because it doesn't look good, that maybe I'm selling it out down here instead of closing out and kind of using my that cultivation process to get into a better trade. Okay, are there any other general questions on candlesticks? If not, Jim, go ahead and do the double line. All right, and then 3.1 seconds, do the next double line. I'll go up here to you false starters. Okay. LSCC announced new CEO after hours. I don't know. Oh, after hours close at 8:49, so it's up here. Whoops, it's up here. Yeah, I'd have to see how it opens. The cues, yes, I think based upon these charts that we're still heading to the obvious resistance level, which is up here. So at least it implies, if not getting there, that we probably still have at least a few more days to the upside. Vidu, this one you can get ready to buy if it opens positive tomorrow. Now, if it opens lower, it's obviously not doing anything of any great consequence. But right now, you want to see that open positive and trade positive. Twitter, stay long. I would suspect the first target is right here, and then if it gets into the gap area, they're going to come up and test the 50-day moving average. GE just is not a dramatic or dynamic trader. It just, I would have my money someplace else versus having it stuck in GE. First of all, the percentage returns and the time it would take to make a percentage return off of GE. Oh, Joe, if you've got 30,000, I might say I'd have, I might do like $5,000, $6,000 positions. And then hopefully, as you're growing it, it gets up to 35,000, 36,000. Now you have 7 $5,000 positions. Weibo. Now, the number of positions is more for to be a discipline management. I've seen so many portfolios where somebody has $100,000 in the market. They've got $24,000 in one position, 10 in another, 18 in another, 4 in another, 2 in another. There's just no rhyme or reason. When you've got 10 $10,000 positions, each position is one unit of your portfolio. It's big enough that it's going to have a good or bad effect on your portfolio, so you want to look at it, and it's much easier to look at 10 positions each night than 25 or 30 positions. And two, if something drastic happens to one of your positions, it's not going to kill it. So even on a day where you have one of your positions get slammed, hopefully 5, 6, 7 of your other positions are trading up and kind of offset the that bad position. Weibo, nothing wildly dynamic just yet. It needs to get up above the 50 to really have anything of any great consequence. Square, you just stay long. I would probably use today's low as a stop. You've had a doji, a spinning top, kind of a hanging man. I'd put a safety stop at today, just below today's low. An SPTG, left-right combo. If this one opens lower tomorrow, I take profits. That's probably telling me they're bringing it back down to test the T-line. So essentially what I'd want to see is it open positive and trade positive. If it did open positive and start trading positive, I'd put a safety stop at today's close, because logic says if it comes up and then comes back down through there, they're still selling it. Mid, be ready to buy this one on a positive open tomorrow, your Bobo type breakout. Next target, I would suspect, would be back up there. That's where people were buying and selling it. Zoo, you can stay long, but notice you're in the overbought area. You had a doji gap up. I'd put my safety stop at today's low. I'd be ready to. Now you do have a J-hook pattern, so it's suggesting that you should be heading for this target, but I'd have my safety stop at just below today's low. Nugget is trying to bottom. It's not doing anything of any great magnitude. Gold, trying to bottom out. It's trading up a little bit. So nothing wildly exciting about Nugget just yet. ENDP, I'd be a buyer of this one, probably on positive trading, definitely if it came up through today's high. That would tell me they are going in that direction. PVG, this one you can be buying. Whoops. Yeah. This one you still can be buying. It's not a great looking chart. It would have been if it gapped up. But I don't know how I hit that every single time. Yeah, that's just not a real great trading chart. Pretty choppy. Genco, this one you can start getting ready to buy. Notice you had a little kicker signal yesterday. It failed at the 50. If you're buying on positive trading tomorrow, you definitely have to see it get through the 50 pretty quick. NetEase. That's a good looking chart. If it opens positive, remember, you always want to see what happens once it gets to the T-line. When it gapped down in the oversold area and did a doji, that told you to start watching for your buy signals. When you watch for your buy signal, where do you think your first target's going to be? Testing the T-line. They failed. If I had bought long here, I'd have closed out here. But now I'd be ready to buy on positive trading after the best friend gap up, taking you up through that level. Freeport, just stay long. Yeah, notice where they gap down in the oversold area. There is your inverted hammer, Harami, bullish confirmation. Right now you can stay long as it stays above the T-line. MDXG, kind of a scoop pattern. That's a good looking chart. I wouldn't be afraid to be a buyer of this one, provided the volume is good. BABA, that one's just not a great looking chart. I mean, if you like it, you can be buying it. It's still not a great looking chart. ATVI failed right there at the 50. If it opens lower tomorrow, look for a bobble. Home Depot, you just stay long. Obviously, you want to see what happens at this level. Right now, I would just stay long. Wave 3 can be greater than wave 1. There's really no magnitude. They're usually fairly equivalent. I know that if you're an Elliott wave proponent, that I think wave 1, wave 2, wave 3 is the bigger of the waves. Wave 4 is a pullback, and wave 5 is not as big as wave 3. But I usually don't hold on to anything that's going to be where I have to wait through a second wave. So when I look at wave 1, wave 2, wave 3, I anticipate wave 3 is going to be approximately the same, at least the same level as wave 1. And I say approximately because I can see when that wave ends based upon a candlestick sell signal. Costco, kind of a dark cloud. I would definitely have my safety stop below the T-line right now. If it comes back through there after the dark cloud, that was the sell signal. Cleveland Cliffs, you can buy this one. It's going to be in the right direction. I just don't know whether it would be my most favorite one to be buying. Melly, stay long. I don't know what this line is. Stay long. Bullish engulfing. The Stochastic still coming up. Possibility of coming back up to the top of that trend. SIG. Get ready to go short on weakness. Oh, okay, you already said that. Didn't read far enough. Keysight. You can get ready to buy this one also. This is your message. Big breakout, profit taking. Now the profit taking's over based upon your Morningstar signal. You can start buying this one with the expectation at least it's going to have probably a steady uptrend from here. Kansas. Not a very exciting stock and probably not a huge percentage gainer, but you've got a kicker signal. You could kind of expect at least a 45-degree off of here. Facebook, you can be buying this one on positive trading. Just use the T-line as your stop. Nice little slow curve setup. See, we did BABA, INSEE. That looks like it failed right here. If you're long, it has to open positive and trade positive tomorrow. CNAT. There's your message, I think. No. This one, yeah, here's a perfect case of when you've gotten up that high and it opened positive and you gapped up again, put your safety stop at the previous close. If it opens here and starts trading positive, put your safety stop at where it opens, because if it comes back down through that level or this level, more than likely it's going to create some sort of candlestick sell signal. Camly did. You can be buying this one. This one was the illustration I was looking for, where they gapped it up to the T line or to the 50 and went positive, telling us the 50 was not going to act as resistance, whereas things like Netflix, they brought it up to the 50 and then sold it back off again. Bank of America, just not an exciting one to trade, but you can buy this one if you like it. Looks like a J-hook pattern setup. We did ECYT. Good little breakout. You stay with this one. EAP. If you're in an uptrend, you can stay with it as long as it stays above the T line, but obviously watch at the 200, which is this level right here, to see if they can break through that area. AVEO, another one that when they brought it up yesterday and it hit the 200, if they had opened it lower and started trading it off, you took your profits. Today they actually gapped it up through that level and traded up. I would now use today's low as a stop. If it comes back down through there, it's telling us the 200 is acting as a resistance level. IQ, same scenario, hit the 50. Now you want to see it open positive and trade back up through that area pretty quick. MedPace, nothing here. If I wouldn't even be long. I wouldn't be long or short. That's still just drifting with no real direction to it. And CIX, nothing yet here. If I was going to be a buyer, I'd probably buy it if it came back up through the high of that day, or of today. Got a hammer, a doji, bullish confirmation. Now you want to see it break this little downtrend. How can one break the habit of day trading and move more towards swing trading? I hate to see good morning profits erode later in the afternoon. Bruce, that was a question that one of my first private training sessions I did up in Avon, Colorado. His nickname on the chat room was Beach. And I went up there, did a training session with him for a full weekend. And he asked the same question. He says, I make great money in the first hour of the day. Then I give it back the rest of the day. What should I do? And it's like the guy going into the doctor and said, Doctor, every time I raise my arm up over my head, it hurts. What should I do? The doctor said, don't raise your arm up over your head. Yeah, so as Newhart says, just don't do that. So if I am day trading, trying to think of something. Oh, lean hogs. If you see a big move in the morning, and I can you have this big move in the morning. Don't want to be on the 15-minute chart. I want to be on the 10-minute chart. That when I see the first sell signal, or if it starts forming, notice how this slammed right up to the 200, and you started seeing selling. As soon as I start seeing selling, I flip to the 5-minute chart and say, oh, I got a bearish engulfing signal. Is that going to make my 10-minute chart? So as soon as I see the first selling, I take my profits. Then I can always come back in later. But so if you've got a big move during the day or during those first 10, 20, 30, 40 minutes, I just take some profits and then wait to see what happens when it pulls back. Then That's a good-looking chart. Notice your left-right combo inverted hammer breakout. Put your safety stop at today's low. If the candles are telling you and the T-line is telling you you're going to lose hundreds, why pay that money to stay in? Is that is the question. Yeah, don't stay in. Close it out. If you're putting on a position and you can't watch it all day, and then your trading strategy is going to be that you going to have to trade it based upon daily charts. If you're sitting here watching it all day, and you've got a situation where, let's say, it came up here, and then you saw it pulling back, and you closed it out, and then it came back down here on your 10-minute chart, you could buy it back. The more you're sitting in front of the screen, the more flexibility you have of getting in and out of positions. That's right. If you don't raise your arm, you will get frozen shoulder. All right. LKP on all three. It all depends on where the money is. Obviously, my option trading accounts are much smaller than my stock trading accounts, and the futures trading is just to keep me from, or keeps me active during the day. Yes, take the profit and go golfing. Okay, everybody, we're still in a very good market. Surprisingly, with all the political rhetoric that goes on in Washington, D.C., but this is why you don't listen to anybody anywhere. Even when I think something should happen, I tell myself, it doesn't matter what I think. There's only one right criteria in the market, and that's the market itself. There's only one right criteria in a stock price. That's the cumulative knowledge of everybody buying and selling. So you can listen to people and say, oh, this stock is dead. Their sales aren't going to be good. You can hear all the opinions out there, but the only opinion for buying or selling a stock is what the chart is telling you. So with that, everybody have a good evening. We will see you bright and early in the chat rooms tomorrow. We'll see you then.